Hello, welcome to this week's Forex Outlook here at XM.com. My name is Rafi Barajan, currency analyst, and here with me is our chief economist, Michalis Floriniadis. So Michalis, it's been a fairly good week for the US dollar for once. We saw it rising sharply, not just against the yen, which is now at almost 3 months highs, breaking above the 109 level. It's also looking very strong against the euro and the pound as well. So what were the main drivers, and what's the explanation for this sudden turnaround?
Absolutely, I think it was impressive performance by the US dollar. It had been a feature of the previous week as well, this strong dollar story, and it seems to be powered by the rise in US Treasury yields. So bond long-term interest rates in the United States are rising. This week they managed to cross above the key psychological 3% level. That's for the 10-year yields. So I think that made the market more favorable towards the US dollar, because it is one of the currencies that actually has one of the biggest yields, which translates into the biggest interest rate returns of any of the major currencies. And that was interesting that this rise in the dollar took place without any really significant, let's say, or huge stories out of the US, but just this steady grind higher of Treasury yields.
Now we had the European Central Bank meeting yesterday. The euro had been falling or even prior to that meeting, and extended its losses after the meeting. Although we didn't really hear anything new from Mario Draghi, and of course they kept policy on hold. So why is the euro all of a sudden looking so bearish?
I think the market is reassessing a little bit the chances that the ECB might speed up its plans with stimulus withdrawals. There is a chance that the ECB could be a little bit more patient. Although we have to stress that Draghi did say that he wanted the schedule to proceed more or less as the market expected. So he wanted to reinforce this notion that the ECB will proceed with stimulus withdrawal, and that he was quite optimistic. He saw the weakness in some Eurozone statistics as more or less one-offs, maybe related to bad weather or to other one-off factors. He saw inflation progressing, rising a little bit, not meeting the ECB's target just yet, but rising a little bit. So he was cautiously optimistic, but the market is sensing is having some doubts more or less with respect to the euro, and also some doubts I would like to add with respect to the story that the Bank of England is going to raise interest rates. We saw the sell-off in the pound continuing. So although the pound overall for the week as a whole did a little better than the euro against the US dollar, it too has faced some significant losses, and this was not helped by the fact of the significantly weaker than expected first quarter GDP reading. So I think these are the factors that also pressured the pound a lot. Not so much we didn't have a lot of stories for the yen. We had the Bank of Japan. It was more or less steady policy. They were saying that they removed the time frame in which they expect inflation to be met. So I think this rounded up the key stories for this week. And having said all this, Rafi, what do we have to look for in the coming week? I think it's looking quite busy. I told you that there wasn't a lot out of the US, but next week is going to be quite different, right?
Indeed, it's going to be fairly busy for the US. We've got to have, of course, the FOMC meeting coming up on Wednesday. There's not going to be any press conference at that meeting, so it's probably not going to be anything much headlines coming out of that meeting. But On Monday, we're going to have the PC inflation measure, which is what the Fed looks more closely at. And on the Friday, we're going to have the April jobs report, the non-farm payrolls report. We're also going to have more central banks meetings. We're going to have RBA meeting coming up as well as UK PMIs and the Eurozone, some important data. We're going to have the flash GDP readings for the first quarter, as well as flash inflation numbers as well. So we could see more volatility especially the euro-dollar pair in the coming week.
So maybe Trump has not been tweeting as much recently, so it's just to turn attention to what the Fed is going to say in its statement, and the non-farm payrolls, of course, and the U.S. employment situation, what is happening there, and we'll see whether Eurozone GDP is going to confirm the weakness we saw, slight weakness we saw in other Eurozone indicators, how that is progressing. Well, thank you very much, Rafi, for your input. Thank you everyone for watching, and have a great day.